Welcome back to Luminous Star Fables. Today, we're exploring one of the most significant financial shifts of our lifetime. The Securities Exchange Commission's classification of XRP as a digital commodity, the rise of tokenization, and how these changes are reshaping the global financial system. We'll walk through this in a trauma-informed way because understanding money should never feel overwhelming or unsafe, especially for those who have survived financial abuse, instability, or narcissistic control. If stepping into digital finance feels like stepping into a storm, you're not alone. When the rules of money shift suddenly, your nervous system reacts to protect you from being blindsided again. That hypervigilance is not a flaw. It's evidence of your strength and your commitment to safety. We are living through a historic redesign of global financial architecture. Ownership, settlement, and value transfer are moving onto digital rails. And understanding these new rails is not about chasing hype, it's about reclaiming your autonomy. When you shift from reactive fear to grounded preparation, you rebuild a sense of agency that no one can take from you. A grounding affirmation for this moment is, knowledge reduces fear and increases agency. By learning how digital assets work at my own pace, I am choosing clarity over urgency and building a foundation of stability grounded in my own understanding. The fog surrounding digital assets is finally lifting, and recent regulatory clarity, especially the SEC's recognition of XRP as a digital commodity, creates a safer foundation for learning and rebuilding. For years, digital assets existed in a regulatory gray zone. The market operated under a guilty until proven innocent mindset, creating confusion, delisting, and fear. That era is ending. Securities Exchange Commission's new token taxonomy, grounded in existing law and the Genius Act, now defines 4 categories of digital assets that are not securities: digital commodities, digital collectibles, digital tools, and stablecoins. This shift creates a regulatory safe harbor that confirms assets like XRP, Bitcoin, Ether, Solana, and Cardano are digital commodities. This matters because clarity reduces fear. It opens the door for institutional adoption, exchange relisting, and long-term stability. Now that XRP is officially recognized as a digital commodity, its value can be evaluated based on utility rather than legal drama. While no one can predict price movements, regulatory clarity historically supports long-term growth by reducing legal risk, encouraging institutional participation, enabling enterprise integration, and shifting focus from speculation to real-world use. XRP's role in settlement, liquidity, and tokenized finance becomes more important than ever. Tokenization is the next major shift. It is not hype. It is the process of converting real-world assets like currencies, real estate, commodities, and identity records into digital units on a blockchain. This shift is quietly rebuilding a financial system that moves over $100 trillion in global value. Tokenization brings speed, fractional ownership, and transparency. Settlement that once took days now happens in seconds. High-value assets become accessible through smaller digital units. Every transaction is recorded on a shared ledger that is programmable, auditable, and secure. Assets like XRP are designed for this infrastructure, acting as high-speed liquidity bridges for cross-border payments. This is the architecture of the future. Major financial transitions rarely happen during calm periods. They accelerate when the old system shows cracks. Bretton Woods emerged after global conflict. The 2008 reforms followed systemic collapse. Today's shift is driven by historic debt levels and liquidity constraints. Institutions move early, before the public sees the headlines, because they follow the direction of the system's rails, not the noise of daily price swings. There are always 2 groups: the proactive learners, who study the infrastructure early, and the mainstream waiters who wait for headlines to confirm safety long after the opportunity window has narrowed. Education is your edge. Understanding this architecture helps you respond with clarity instead of reacting with fear. A major part of this shift is the rise of tokenization, which refers to converting real-world assets, such as currencies, commodities, real estate, or financial contracts, into digital tokens that can move across blockchain networks. Tokenization allows value to travel globally in seconds, with transparency, programmable rules, and reduced reliance on intermediaries. This technology is quietly reshaping the global financial system by enabling faster settlement, automated compliance, and more inclusive access to financial tools. As institutions adopt tokenized systems, Assets designed for high-speed settlement like XRP may play a foundational role in the new digital economy. For survivors of narcissistic financial abuse, these rapid changes can feel overwhelming. Financial trauma often creates fear, avoidance, or a sense of being behind in understanding money. A trauma-informed approach recognizes that learning about new financial systems should never feel rushed or pressured. Instead, survivors can approach this shift with curiosity, grounding, and self-compassion, focusing on understanding the basics, rebuilding trust with money, and preparing for the future at a pace that feels safe. Reclaiming your financial power requires emotional grounding, not urgency. Trauma-informed financial recovery begins with safety-first awareness. Focus on learning how the system works rather than watching daily price movements. Spend a few minutes this week learning about settlement cycles. Understanding the how reduces the emotional weight of the what. Micro-stability planning helps rebuild trust with money through small, consistent actions. Something as simple as renaming a savings account agency fund or safety nest can shift the emotional energy of your finances from scarcity to autonomy. Future-ready education means recognizing that confusion is a sign you're early, not behind. Remind yourself, most people don't know what tokenization is. I am ahead of the curve. Here are 3 journaling prompts to help you process emotions and rebuild trust with money. When I think about digital assets or new financial systems, what emotions come up and what do those emotions need to feel safe? What small financial decision this week helped me feel grounded, and how can I honor that progress? What kind of financial future do I want to build, and what support would help me feel confident navigating these changes? Long-term stability comes from wealth architecture, not emotional speculation. XRP recently surged to $1.60 before stabilizing around $1.46. Those focused on architecture see stabilization as a sign of network strength, not a loss. Your grounded action plan includes prioritizing macro education, securing your assets off exchange, exploring tax advantage structures, considering corporate-level positioning, and seeking community that values discipline over hype. The architecture of the world is changing. By understanding it now, you're not just participating, you're securing your place in the future of value. If this video helped you feel more grounded, more informed, or more empowered, you're already rebuilding your financial future with intention. You deserve clarity, you deserve safety, and you deserve a financial system that you understand, not one that controls you. Be sure to select the next video for more financial rebuilding guidelines.
You know, while most of us are just going about our day thinking everything's normal, something absolutely massive is happening right under the surface of our financial system. A quiet but fundamental redesign is already underway, and honestly, understanding it might be one of the most important things you can do for your financial future. So, let's get into it.
I mean, really think about that for a second. If you went outside right now and asked 10 random people on the street, hey, what does tokenization mean? How many do you think would have a clue? My guess? Probably 0. And that huge gap between what's really happening and what most people are aware of is exactly why we need to talk about this.
And this quote just nails the scale of the change we're talking about. This isn't just some new fintech app or a hot new stock. We are talking about the basic architecture, the very plumbing of the entire economy being ripped out and rebuilt for a digital world. A world where value and ownership can move in seconds, not drag on for days. Okay, so let's start with the big picture. We're calling this a silent revolution because for you and me, on the surface, nothing really looks different. But behind the curtain, the old, slow, clunky financial rails that have been around for decades are starting to be replaced.
And listen, this goes so far beyond just crypto. We're talking about tokenizing everything: stocks, bonds, real estate, precious metals, even complex financial contracts. The whole idea is to take the proof of ownership for all these real-world things and put it on a new, super fast digital infrastructure. Now, this is where it gets really interesting. Look at the difference here. In the old system we use today, if you sell a stock, it can take days, literally days, for that trade to fully settle and clear through this whole chain of middlemen. But in the new digital architecture, that ownership can transfer and settle almost instantly on a shared, transparent ledger. That, right there, is an absolute game changer for the speed of money. For years, this whole revolution was kind of stuck in neutral, at least in the US.
because everyone was just waiting for regulators to make up their minds. But then, pretty recently, a huge decision from the Securities and Exchange Commission, the SEC, basically gave this whole thing a massive green light to move forward. So for about a decade, there was this turf war raging between the SEC and another big agency, the CFTC, over who got to regulate crypto. The SEC was leaning on this really old legal test from 1946 called the Howey test. It basically asks, are people putting money into a project together hoping to make a profit from someone else's work? If yes, it's a security. But crypto, being so decentralized, just didn't fit neatly into that old box. It really broke the model. So here's the distinction that mattered. Think of it like this. A security, like a stock, represents ownership in a company. It's heavily regulated. A commodity, on the other hand, is just a basic good, like gold or oil. Its value comes from supply and demand. For all these new digital assets, figuring out which category they belong to, well, that was the multi-billion-dollar question. And then, finally, the SEC gave an answer. They released what's called a token taxonomy, basically a new set of classifications. And they created clear categories for things like digital collectibles or digital tools. But the most important one, the one that changed everything, was this new category called digital commodities, a class of assets that is explicitly not a security. And this right here is the headline. The SEC went on the record and officially classified major assets like Bitcoin, Ethereum, and XRP as digital commodities. For XRP, this was huge. It ended a brutal, years-long, $100 million lawsuit. And just like that, the market finally got the regulatory clarity that all the big institutions had been waiting on for years. So with that legal fog finally lifted, a technology that was kind of waiting in the wings could finally step into the spotlight. And that technology, of course, is tokenization. So what is it really? It's actually pretty simple. Tokenization is just the process of taking a real-world asset, like a house, a painting, or a share of stock, and converting the proof of ownership for that asset into a secure digital token that lives on a shared digital ledger. It's like a digital deed. And this brings us right back to the plumbing. The old system is slow, it's clunky, it's clogged with paperwork and middlemen. But the new tokenized system, it allows that exact same value, that same ownership, to move around the globe and settle in seconds with total transparency. It's just a better, faster, cheaper way to do it. Okay, so what happens when you combine that regulatory green light with this incredibly efficient technology? You get the perfect conditions for a massive movement of capital. Let's talk about the sheer scale of this migration. When the big institutions, the BlackRocks and JP Morgans of the world, look at this space, they aren't just looking at today's crypto market. No, they are looking at the total value of all the world's assets that could be tokenized. We're talking global stocks, bonds, real estate, and that number is well over $100 trillion. This chart just lays it out perfectly. It shows you exactly why the big players are getting ready. The entire crypto market as we know it today is just a tiny sliver compared to the vast ocean of traditional assets that are waiting to move onto these new, more efficient digital rails. The real opportunity here is measured in trillions, not billions. So here's the thing you have to understand. For the big asset managers and banks, this isn't some fun little side experiment. They are strategically repositioning their entire businesses for the future. They know that when a new system can move value faster, cheaper, and safer, all the money eventually migrates there. It's inevitable. But look, a systemic change this huge isn't just about trillions of dollars and big bank strategy. It's also deeply personal. And frankly, it can be really unsettling to feel like the world is changing right under your feet. For anybody, but especially for those of us who have maybe experienced financial instability or even abuse in the past, big economic shifts like this can be really scary. They can trigger a lot of fear and distrust. Financial uncertainty can feel threatening on a deep level, and it is so important that we acknowledge that.
So how do you actually navigate all this? Well, here's a helpful framework. First, just focus on awareness. Learning more about what's happening reduces fear and gives you a sense of control. Second, create small weekly financial rituals, little habits that help you rebuild trust with your money. And third, start educating yourself on these new tools, but do it at your own pace. The goal is to feel prepared, not blindsided by what's coming. And in the end, this quote really captures the challenge and the opportunity perfectly. The real advantage during these big transitions doesn't go to the people who get lucky. It goes to the people who take the time to understand the new system before it becomes obvious to everyone else. And that brings this whole thing right back to you. With the very foundation of the financial system being redesigned, the single most important question you can ask yourself isn't, what should I buy? It's, what kind of financial future do I want to build for myself, and what do I need to learn to start building it today?
You know,